Realty Income has seen its share price drop by 20% over the last 3 months alone. As a result, it's now back to where it was at the lowest point of this bear market, even before the Fed started cutting interest rates. In total, Realty Income has now been in a bear market or in a quasi-bear market for nearly 5 years, and it trades at a 35% lower share price than before the pandemic, and that's despite growing its cash flow by about 25% since then. What this essentially means is that the company's valuation has now dropped by 60%, which I would define as a real market crash. I'll put a table on the screen showing its current valuation versus its historic normal valuation, and you'll see there that it's historically cheap. And as a result of this, its dividend yield has also expanded very significantly and now surpasses even 6%, which is truly rare for a REIT of this quality. I'll put a chart on the screen showing its historic dividend yield, and you'll see there that it's currently yielding more than any time over the past 10 years. Is now finally time to buy Realty Income while it's heavily discounted? Hey everyone, this is Jos. I run a small investment firm that specializes in REIT investing, and in today's video I'm going to share my latest thoughts on Realty Income following its recent market crash. But before I get into it, here's a quick word from our sponsor, High Yield Landlord. Over the past year, I've had the privilege of interviewing the management teams of some of the most prominent REITs, including Realty Income, Vici Properties, Stag Industrial, and many more. These exclusive interviews have helped me and the 2,000 members of High Yield Landlord build a portfolio of what we believe to be the best REIT investment opportunities, and today I'm excited to give you access to it completely for free. Simply click on the screen and you'll be redirected to High Yield Landlord, which is my REIT newsletter. Sign up for the free trial and you'll instantly unlock access to my personal REIT portfolio, all my top picks for the coming year, and much more, all free for 14 days. You can cancel anytime, no questions asked, but if you decide to stick with us after the trial, you'll also secure a special discount for joining today. We are proud to be the largest online community of REIT investors with over 2,000 members actively growing their portfolios with REITs, and I want you to be part of it. With REITs trading at historically low valuations at the moment, there has rarely been a better time to invest in this sector, and we think that 2025 could be a particularly rewarding year. Join us today completely risk-free and see why our members have rated us 4.9 out of 5 from over 500 reviews. I can't wait to welcome you inside. Okay, back to Realty Income. And so is it to buy, a hold, or a sell at these levels? And I think that the answer really depends on your view of future long-term interest rates. That's because Realty Income, just like many other REITs, have become extremely sensitive to long-term interest rates. And so you'll note here that I'm not just referring to the Fed funds rate, which the Fed has been cutting lately. I'm referring to the long-term rates like the 10-year Treasury, and those have been rising lately, unfortunately, and this explains why Realty Income has been declining. There's a very strong inverse correlation, especially in the case of Realty Income, because it's mostly investing in net lease properties that have very long-term leases, fixed rent hikes, and so these are what we would typically define as long duration assets in the real estate space, and they are particularly sensitive to long-term interest rates. Therefore, if you think that long-term interest rates will decline, then now would be a great time to buy Realty Income, as it would likely surge in value in that scenario. However, if you think that long-term interest rates will remain higher for longer, then I probably wouldn't give it a buy rating, I would rather give it a hold rating. And finally, if you think that long-term interest rates will keep creeping higher, perhaps because of another surge in inflation, then Realty Income would be a sell. My opinion is that long-term interest rates will go lower, and therefore I rate Realty Income a buy at these levels. Even then, I'm not buying Realty Income because I prefer one of its close peers, and I'll discuss that later, but I still expect Realty Income to do well over the coming years as interest rates eventually return to lower levels. And so why do I think that? In short, I think that the burst in inflation and interest rates that we had in recent years was a temporary anomaly that resulted from the pandemic, and that we are now gradually returning to our pre-COVID economy, and with that I also expect inflation and interest rates to return to lower levels. The stimulus checks, the supply chain issues, the distorted consumer behavior led to high inflation, which then forced the Fed to hike interest rates at an unprecedented pace. But that was all temporary, and by now things have already returned to normal, and as we noted in our most recent macro update at High Yield Landlord, we believe the 5 horsemen have collectively put the economy on an unstoppable secular trajectory towards low inflation and low interest rates. Low inflation will come first, and interest rates will follow. And when we say the 5 horsemen, we are here referring to the aging demographics, technology, over-leverage, globalization, and technology, all of which are strong disinflationary factors. By the way, we discussed this topic in great detail in our recent macro update at High Yield Landlord. I've temporarily removed the paywall so you can read it for free. It will be the first link in the description of this video. But these are the reasons why inflation and interest rates have been trending lower already for decades leading up to the pandemic, and today they are stronger than ever. As a result, inflation has now already returned to pre-pandemic levels. In fact, if we simply adjust for real-time shelter, then inflation has been below 2% for 1.5 years already. This return to lower inflation has already given the Fed enough confidence to start cutting interest rates. They've cut them already by about 100 basis points. But despite that, the long-term interest rates have surged lately. And so why is that? And I think that's simply because the markets are volatile and there's growing uncertainty because there's new change happening right now. Trump just won the election, and this caused rates to surge because tariffs, mass deportations, and tax cuts are perceived to be inflationary. Moreover, the latest economic data was stronger than expected and pushed the Fed to take a break in cutting interest rates to make sure that inflation isn't accelerating. This caused long-term interest rates to rise in recent months. There is growing uncertainty, and that's the market's way of expressing it. To be fair, I don't know what will happen in the near term. I don't think that anybody does, but I still think that the economic forces that I described earlier, the 5 horsemen, are so strong that the long-term trajectory remains the same. The debt market seems to agree with me here as the 3-year ahead inflation expectations is just around 2%, and the Fed also seems to agree with me as their current projection is that interest rates will reach about 3% by 2027. So what this means is that they're taking a pause right now and we're likely going to get fewer rate cuts in 2025 than what we thought just 6 months ago. However, the end outcome of looking 2-3 years out is still expected to be more or less the same, with interest rates returning to about 3%. And if that's true, then I would expect long-term interest rates to also gradually return to low levels in the coming years, and especially so if the economy also weakens a bit, and I view this as a strong possibility given that we're already long overdue for recession anyways. And in that scenario, I would expect Realty Income to reprice at a materially higher level, and for this reason I give it today a buy rating. Even then, I'm not buying shares of it, and there is a simple reason for it. One of its close peers called NAREIT is even more attractive in my opinion. It has sold off for the same reason as Realty Income, and they now trade at very similar valuations, with NAREIT trading at about 11 times FFO, Realty Income is slightly above that at 12 times, and their dividend yields are right around the same level as 6%. However, I think that NAREIT is likely to enjoy better long-term growth prospects because of 3 key reasons. Firstly, it's smaller in size. I have in previous videos explained that I fear that Realty Income is getting too big for its own good, and this is likely to hurt its future growth rate, and it's also going to force Realty Income to expand into new property sectors, slowly morphing into a jack of all trades. Then the second reason why I prefer NAREIT is that it's less exposed to risky property sectors like pharmacies and dollar stores. These are some of my least favorite net lease properties today, and unfortunately Realty Income is very heavily exposed to them. And thirdly, it also has a better balance sheet for today's higher interest rate environment. Realty Income has much shorter average remaining debt maturities. I think they are closer to 6 to 7 years, whereas NAREIT is at about double of that. So it's less exposed to the recent surge in interest rates. For all these reasons, we invest in NAREIT rather than Realty Income at High Yield Landlord. If you want to access our full portfolio, you can join us today for a 2-week free trial. It will be the second link in the description of this video. You won't be charged anything for the first 14 days, so you can just join, see our portfolio, read some of our research, our exclusive CEO interviews, and see if the service is for you. If it's not, you just cancel, you won't be charged anything. But if you decide to stick with us for the long run and invest in REITs using our strategy, you'll also get a special discount for joining today. Thank you very much for your interest. If you could please click the like button, that will help me a lot to keep on growing. Let me know in the comment section below what you think of Realty Income. Thank you very much, and see you at my next one. Bye bye.